Hey everybody, happy Sunday and welcome to the Stock Trading Pit episode 8. Today's agenda is going to have 4 segments as always. Segment 1 is going to be talking with traders as Dan and Scott Melker talk about how Scott got into the markets, what he trades, and how he trades. Segment 2 is going to be the broad market recap as we go over the broad market ETFs into the week ahead. Segment 3 is going to be the watch list with Ben, aka PatternProfits, just going to look at a couple stocks that he's looking at into the days and weeks ahead. And then segment 4 is going to be weekend chart requests. As always, we ask everybody what charts they want to see for this show, and we picked 5 that we want to go over. So everybody sit back, relax, and let's get started.
Hello, everybody. Dan here with TrendSpider, and this is another episode of Talking with Traders, where we get to know the people behind the trades. Today, I've got a really cool guest for us, the Wolf of All Streets, or as you may know him, Scott Melker. Scott, thanks for being here.
Thank you, man. Appreciate it. You having me on here.
Definitely. So this is all about getting to know you and how you got into trading. So let's start there. What brought you to this world?
I had kind of a strange path. I started buying stocks in the 1980s. I'm in my 40s. So probably, as they call me on crypto Twitter, okay, boomer, right? Because I'm a lot older than the rest of the crowd. And then I went to University of Pennsylvania for college in the late 90s, and sort of everybody there had the finance bug. But I passed on a job at Solomon Smith Barney on Wall Street and decided to become a DJ instead, and spent 20 years struggling through a DJ and music producing career. But of course, you always have time for markets. DJs work late at night, and so I always had a lot of free time and stuck with the trading. Around 2015, I basically aged out of DJing, decided to call it quits, and started focusing on trading then full time. Found crypto in late 2016, early 2017, and the rest is somewhat history. I fell down the rabbit hole like most people and became utterly consumed with this insane 24/7 casino, and never looked back. So that's pretty much how I became a trader. And I really, with all of my mixed success early, didn't really become somewhat professional or fixated with it until around 2017.
Do you mostly just trade crypto?
No, I mean, I've traded everything. Of course, I was doing it for a very, very long time before crypto even existed. So, I had my stock phases, my Forex phases, my options phases, my get wrecked with penny stocks phases. But crypto, really, really resonated with me. I came in like most people just for the money. If you were trading, and the DJ community also was sort of early on crypto, I think.
Okay.
And by 2017, you just saw these like mythical 100x gains in days, things that would take you a career lifetime of trading in other markets. And so obviously you got hooked. And then I sort of backed into the importance of Bitcoin and crypto from that, right? I came for the money, I came for the trades, and I stayed for the maximalism and the future global reserve asset, digital gold, whatever narrative you want to attach to it. And so I think the combination of my love for trading and then my actual love for Bitcoin and crypto have combined to really become an obsession, like I think it is for most people.
That's very interesting. Do you do you mostly hold crypto, or are you actually trading it in and out?
I mean, I've gone through phases of extremely, extremely aggressive trading, but one thing I can definitely say is that I've always been a student of good portfolio balance, I think, and I've always understood the shortcomings of traders versus the market. So I generally believe that anyone should have at least 70% of their portfolio in long-term holds, investments, buy the dip, don't really look at it, treat it like an IRA or a long-term investment. And then I believe you should have about 15% in cash and 15% to trade. Of course, I'd ratchet that up if it's like a full-on alt season or something. Sometimes I'll be up to 50, 60% on the table, but only in those rare moments where I really believe that the market is worth it. But generally, I'm trading with 15 to 20% of my stack, and the rest of it is just sitting there. I'm not trying to outthink the most obvious way of generating wealth, which is just to put money away and don't touch it.
Yep. It's that 100 baggers approach. Just stick it in a can, and a coffee can, I think, is in the book, and put it away and forget it exists.
100%.
I tend to agree. I think a lot of new traders, think it's one or the other, and it really isn't.
No, I think the best traders are the ones who understand that there's going to be periods of drawdown. You're going to fail. You're going to get emotional. You're going to do all the things that are wrong, and you don't want to have your entire stack on the line. Like anyone who's played poker, you may be sitting down at the table with 10 grand, but if if your entire stack is 200, you're not throwing 200 on the table because you're likely to go bust. So I believe in very, very, very strict risk management and trying to not outthink myself, because no matter how long you do it, your own actions become unpredictable if you don't have really strict rules and sort of restrictions on how you approach and how much you're willing to throw into a trade.
That makes a lot of sense. I think position sizing, right, and things like that. How do you deal when you're holding a large portion of your net worth in buy and hold type of thing? How do you deal with the emotional side of the drawdowns? When they come, because they always do come. And yesterday in the stock market, I know people who sold it all at the bottom. So it's I'm curious how you think about that.
Well, I don't do that anymore. But I have, like anyone else. I've learned to understand that the minute that I want to capitulate and sell, it is the bottom, and that price is going to go the other way. But honestly, I think not obsessing over it and understanding that you're in it for the long term and kind of refreshing the portfolio balance is an emotional exercise, but not one that's constructive in any way, shape, or form. Because if I bought something and I'm not looking to sell it for years, it shouldn't matter to me at all what happens over 5 days, right? As brutal as it is to see these massive swings, especially crypto, where you lose 30, 40% of your portfolio value in a single day, it really doesn't matter if you assume that it will go up, and it always does. I mean, markets trend up. I'm not saying that it can't fail. Bitcoin could, but I'm a firm believer that markets will always trend up if you zoom out and wait long enough. So really, it sucks for a few minutes, but I definitely do not react. I do not trade through corrections. If anything, I'm already scaling out on the way up. Bitcoin made a run here to almost 58,000 recently. I was one of the people extremely vocally on Twitter talking about taking profit, primarily from 50 to 100x alt trades that I had been a part of, and crazy, DeFi Uniswap type stuff. And everyone thought I was nuts. And here I am with plenty of cash buying the dips now that we've corrected. So, I think it's very, very important to not try to time it and to scale in and out depending on whether the market's up or down.
I love that. I'm a big fan of scaling in and out as well. Often I screw up, and my first buy in a scale in is the biggest, right? And I always regret it, right? Because the price is going to mess with you. And just like when you feel like it's time to sell, it's capitulation time. The same is true in reverse, right? You're buying.
You should do exactly the opposite of what your first instinct is.
Yep.
If you're thinking I should absolutely hold this or buy, you should probably be selling. Should have bought more is the first sell signal that you probably have. And I got to get out of this before it goes to zero is definitely the time that you should be buying.
Yep. I think a lot of people learned that this past March, about a year ago during the COVID. Where it felt like the world was ending, and that's when you would have been the best time to buy.
That's when the world was starting.
The new world, right? It was like 10 years of technical acceleration packed into 3 months. It's pretty wild.
In markets and in life, right? I mean, 2020 and into early 2021, we've had more happen than probably the 20 previous years collectively. So, and obviously markets generally reflect that. So it's not really that surprising that, there was a time less than a year ago that Bitcoin was trading at $3,800.
Yeah.
Crazy.
It's wild. I know you focus heavily on crypto. Have you been paying any attention to any altcoins, or are you mostly focused on, the big ones?
Yeah. As an investor, my stack is primarily Bitcoin with some Ethereum. And then it's sort of my strategy when I do exceptionally well on an altcoin trade, I keep, 10 to 20% of that. I figure it's long since the house's money, and I throw that into my longer term holds, and just maybe I get a moon bag, maybe it goes to zero. I don't know, but I don't care at that point because I've taken so much profit from it. But I very aggressively have would it almost be unfair to say traded because luckily I've had the opportunity to invest in a lot of projects early in the seed rounds and private rounds of stuff. And those are the ones that have done just so exceptionally well. But I do, I mean, I am a shitcoiner through and through. No doubt. I can't, that's what I started with when I came. I bought a bunch of Bitcoin so that I could buy Ripple and Ethereum and all that stuff in 2016 and 2017. And I don't foresee myself ever quitting that alt life.
I remember those days. There's a funny hidden feature in TrendSpider. If you pull up an altcoin and you push Alt 0, get it, Alt 0, it'll offer to notify you when that shitcoin goes to 0.
Oh, thank you. It's the rug pull alert. I love it.
It's like let me know when price equals 0 and RSI equals 0. It's like, okay, it's dead. So I always thought that was a funny thing to add in.
That's amazing.
So what's your favorite altcoin right now? I'm just curious. I'm sure a lot of people watching are too.
Sure. I mean, there are a few that I've definitely done exceptionally well with and I love. From a technical perspective, I've been invested and bought every single dip on Polkastarter. I don't know if you're familiar with them. The coin is POLS. It's just an amazing project. A lot of the biggest IDOs are launching on that platform, and so it just sort of continues the hype, and there's a lot of follow through with price. I mean, I bought the dip when it dropped from 20 cents to 10 cents in a day, and was able to sell a bunch between $6 and $7. So really, really massive moves, and it's corrected now, and I've again been buying more. I absolutely love eGold. I don't know if you're familiar, Elrond. It used to be ERD. I traded that from, very publicly from around 15 sats up to, 2 to 300, kind of exited. And then they rebranded to eGold. It dropped all the way sort of back down. I started buying it at $10 and it was up in the multiple hundreds. Of late. Now it's corrected down to almost $100 and I started buying again. Those have been the ones that I've been very heavily focused on. As many coins as I'm in, because I'll take an early investment or something, I try to only focus on a few when I'm actively, trading in and out.
I was going to ask you, how many positions do you tend to have open in your long terms and your
at this point with the long terms, there's like small percentages of like 20 or 30 coins in there from just epic trades that I've had in the past. But something I'm actually actively babysitting, I try not to have, sometimes it'll be like up to 10, but like 3 to 5, is an ideal. Like I said, if it's like full on alt season, I'm at it. Because it's funny, you talk about risk management and you're like, I'm going to risk 1% of my portfolio on any given trade. And like, that's where people stop with their risk management. I think the bigger part of risk management is knowing when to sit on your hands and knowing when to man up and get your money into the market. And so I'm very, very good at waiting until I really think it's good and then just plowing hard for a week or two and really stacking gains.
Yeah, it's I found, and tell me if you agree, but I found it's a lot easier to decide when you're going to buy than when you're going to sell.
Right? Buying is the easiest part of trading. It requires literally, I always joke, like, who cares? Like I love charts because they're really fun and I get to draw pretty lines and it makes me feel like I'm creative, but you can literally like throw unicorn dust into the air and shine a flashlight through it and then throw a dart and see if that tells you a number. I don't know, like pray to whoever you pray to find your entries. It literally doesn't matter at all. I'm convinced that with proper risk management, well-calculated positions, I could literally throw darts for entries and still be profitable. Even if I'm wrong, the dart is wrong 7-8 times. As long as you're cutting them really short and losing a little, and you can allow the runners to run, you will make money.
So let me ask you, how do you avoid getting wicked out if you're using really tight stops like that?
It's not that the stops are so tight, it's that the position size is well managed. And I think that's the problem, is a lot of people start at position size. They say like, this is how much of this coin I want to buy, but you literally can't do that. You have to start at your stop loss and calculate back, right? So I look at a chart, decide on some arbitrary lines that I've drawn that I find to be important that other people probably don't. And I set my stop loss accordingly, right? Below a few percent below support, for example. Like I don't put it right on support. I want to give a little, room for that wick that's inevitably going to come because nothing ever stops exactly on the line. I get stopped out sometimes, but they're small calculated losses, right? So even if I get stopped out a bunch of times, I know that if I don't on, 3 or 4 and they really go big, that I'll be fine. But the answer is that, I can give a wider stop if I just lower the size of my position. People really, I think they just look at a coin and they go like, I want to own 10 grand of this, but that doesn't make any sense.
Interesting. And how do you pick profit targets then?
I scale out. So like I draw my arbitrary lines. Listen, this was a lot easier when I was like not kicked off Binance on American. And, now that it's like primarily Uniswap and stuff, I'll use Matcha sometimes for limit orders. But like when you're primarily on Uniswap, it's just kind of like you have to sort of arbitrarily scale out. It's less about stops. And I have to basically account for my stop loss being 0. So the position sizes are smaller since there's no stop losses. But basically like, everyone has their own strategy. You could take a little off at 5%, 10%, 15%, 20%, or you draw lines on the chart and you say, I don't want to get, front run on this resistance. So I'm going to put it 1% below each line and I'll take 25% at a time. And like I said, if it exceeds those targets, I move it to my moon bag and don't think about it.
Got it. That's interesting. It's a very unique way to think about it.
People make the huge mistake of trying to decide what their exit is like in its entirety. Like I've got this whole thing. When do I sell it? You just scale out and you don't have to think about it. You're happy it keeps going up. You're happy you got some profit. If it dumps after you took some profit, gosh, at least I got my money off the table. Really, every time you sell,
scaling your stop loss is interesting.
Yeah. Every time you sell and every time you reduce your position size, you make it emotionally easier and just in every way easier to manage that position because it's become smaller and you have some off the table.
I love it. Thank you for sharing that. Nobody's ever shared a strategy like that here before. And I think a lot of people will love to hear that.
Good. That's how people should approach it, I hope.
So it's usually either people do trailing stops or they just have, a hard stop loss, right? It's like, I drew this line and I'm getting straight out. Right?
If I'm in like 5-10% profit, I'm moving my stop up to entry. I'm not losing money on that trade. I refuse to lose money on a trade when I'm in even the most like basic low level of profit. And from there, I'll either, sometimes I trail it with a stop, but also like, again, this is mostly on Uniswap. So this is manual, right? Mm-hmm. So like if it drops this amount, I'll exit, but I'm also taking profit on the way up. So it's kind of a combination of both. I mean, I've been at it a long time, so I sort of have an idea. And I don't really get regret when something keeps going. Like I'm pretty happy when I make money on a trade.
That's healthy.
I've gone broke before, man. It's not cool.
Yeah, no, I've blown up accounts before too.
Yeah.
I think I've told this story here before, so I don't want to bore anybody, but my first trading experience was futures in the middle of the night and I had no idea what I was doing. And it did not end well.
Yeah. First time playing online poker, right?
Yep. And not knowing the rules of poker, just kind of, playing with it. So,
yeah.
Well, that's really interesting. Thank you very much for sharing that. We're running out of time, so I'm just going to get to my last question. And I ask everybody this, and I'm fascinated to hear what you say, but what advice would you give a brand new trader?
Don't trade.
Okay.
Invest. Honestly, the statistics are so heavily against you. We know for a fact that like 95% of traders fail. Not only do they fail exceptionally fast, right? I mean, I lost so much money for so long before I just, got tired of losing and finally turned it around. But most people would have probably capitulated or quit. And I think that's the experience for most traders who have made it, is that they somehow built another stack and finally turned it around. But at the end of the day, the singular way that people have generated wealth over time is to get money into the market exceptionally early and don't touch it, right? And then dollar cost average in, and don't try to be a trader. Don't try to guess at it. Don't try to think that you're smarter than the market. Don't think your chart is some stroke of brilliance that nobody's ever thought of, because dude, hedge funds don't even beat the market half the time, right? These are supposed to be the most brilliant guys, Wall Street, whatever. I mean, when the market bounced last year, in March, these guys were shorting it all the way up. Hedge funds got absolutely destroyed. Like 12% of hedge funds were profitable in April or May, I think. And that was the biggest long opportunity in the history of the stock market since maybe the end of the Great Depression. You know what I mean? So if you are going to trade, all I can say is do it with an exceptionally small percentage of your money. If you can't turn $10 into $50, you can't turn $10,000 into $50,000, and you certainly can't turn, you need to start really small and prove that you can do it. Make sure that you're emotionally equipped for scaling up, and take it really slowly, and just know it's not an overnight thing.
It is definitely a 10,000 hour skill. Right. If you're going to trade,
Outliers.
you got to go to school, and school is expensive.
But staring at a chart doesn't count towards your 10,000 hours. That's the thing people don't realize. They stare at it and think they're doing something, but all you're actually doing is giving yourself a chance to make a poor emotional decision.
That is a really good point. There is a big difference between being a chartist and being a trader, right? The whole execution side is difficult.
Yeah.
Right. And it's about getting fills, and it's about, scaling and, managing risk and, preserving your capital, not just,
Agree.
I think I saw somebody say this on Twitter, and I think it's smart, but it's something like, traders who do well don't think about how much they can make. They think about how much they can lose.
Oh, I joke all the time, or not even joke. Like, I plan my losses on every trade, and that's the way I approach literally everything. I don't care what I'm going to do. I care about what I can potentially make. I care about what I can potentially lose. That was the light bulb moment for me.
Yeah. Yeah. And I don't think,
and that's how I got my position sizing right. That's when you start with your stop loss and you realize that your positions are probably a lot smaller than you think, but you raise your position size because you're thinking about how much you need to bet to make a certain amount. And that's the dead opposite approach of what you need. You should be lowering your position size to make sure that you're not emotional in the trade and that you know exactly what you'll lose and you're comfortable with it.
Yep. That's words of wisdom, and everybody listening should rewind a few minutes and listen to that again. Scott, thank you for being here again.
Thank you.
Really appreciate it.
Thank you very much, man. It was awesome.
So for everyone watching, if you want to get to know Scott a little bit, we're going to put the links in the description. But, he's Scott Melker on Twitter. And Scott also hosts, I'm sorry, I didn't get a chance to
The Wolf of All Streets. Yeah, it's my name, The Wolf of All Streets podcast.
Yeah, but you host the Wolf of All Streets podcast, and it's on Spotify, YouTube, and Apple. So definitely check that out as well. And
awesome.
Thank you again, man.
Thank you. This is great.
Definitely.
Alrighty, let's look at the broad markets going into a brand new month. So we do have some monthly charts to look at for SPY, QQQ, IWM. Going to throw DIA in there, the Dow Jones ETF, because it absolutely tanked into Friday's close. And then VIX. So let's jump into it. SPY, we have this gap below that started to fill on Friday. You can see here that we did not fully fill the gap. That's the nice thing about the gap snake. It will show us if the whole gap is filled. You can see here there's still a little bit of an open gap. We have this broadening formation as well. So if we did continue down into next week, this trend line below would be possibly an area of interest below to check out. But then on the monthly side of things, we closed, I wouldn't say it's the strongest monthly close I've ever seen, but the main thing was that we held this previous resistance now acting as a level of support multiple months now, actually 3 months in a row. We didn't even actually test it this month. We tested right above it and then bounced. So on top of that, we have the seasonality here going into March. Since 2015, this is a little concerning, 33% win rate over the last 6 years. So, we'll see what happens going into this month of March. Just because there's a 33% win rate over the last 6 years doesn't mean that this month is going to be red, but it is important to note and just compare and used with technical analysis. The one thing I want to mention here on SPY is the raindrop. We actually did have a green raindrop here on Friday. So the fact that the volume weighted average price during the second half of the day was higher than the first, and the fact that there's quite a bit of volume here at the top of the range is a little bit of a discrepancy between what we're seeing with just the regular candle here, which is a pretty ugly candle. So keep that in mind going into the week ahead. There's never anything that's an end all be all in the markets. Just because we have a red candle and a green raindrop doesn't mean that we can't go down, but it also doesn't mean that we can't go up. The gap below, though, is something to consider going into the week ahead. Now, on the Qs are looking very different. Now we do have a gap below that we haven't even come close to filling here around 302, 303. If we turn on the volume by price, you'll see here that the volume shelf did its job. We're anchoring from this low in pretty much right before the elections happened, pretty much the capitulation before the next leg up in the markets. And you can see here that this volume shelf did exactly what it was supposed to do. Prices started dropping back down to where a majority of shares were holding at break even. Supply dried up, and that's how we were able to bounce. We didn't necessarily bounce here because buyers stepped in. Remember, supply and demand are a fascinating thing. You don't always have to have an increase in buyers for prices to bounce. You can simply just have sellers drying up as they get back down to break even, i.e. this volume shelf. Anytime the price is above a volume shelf, as the price is moving back down, these shares are now back to break even. Now, on the monthly side of things, you can see here that, we are pretty much at this longer term resistance. I mean, this is something to consider. I mean, you can see here that we pretty much grinded along this for years, so we could easily just grind along it again, but it is something to consider that we are at this longer term area of resistance since 2015. 50% win rate, not really any type of edge using the seasonality over the last 6 years, but it is still good to keep an eye on to see if there was any discrepancy there or any low win rate like we kind of saw on SPY. So that is the cues. On the weekly side of things, this is something to keep in mind as well. It's longer term. I don't want to say longer term, but about this year-long support has broken down. Pretty big breakdown with an increase in volume. So keep that in mind on the bear thesis. But when you're trading and you're investing, you always have to have the bull and the bear thesis. You can't just have one, or you're going to be trading blindly. So that's the weekly, the daily, and the monthly on the cues. IWM had a pretty rough week, pretty much like everything. I don't know too many people who actually would say that their week was great last week. But it is what it is. It happens. Now on the daily side of things, you can see here I'm anchoring from this October 30th low again. The thing that concerns me about IWM is we have Swiss cheese on the daily chart. What does that mean? Well, we have gaps below literally. I mean, we have like 4 gaps below. This reminds me a lot of what the chart looked like in March of 2020. I'm not saying we're going to have a crash like March of 2020 at all. However, whenever you have this many gaps below, it would be irresponsible to ignore them. So something to keep in mind going into the weeks ahead. We do have this kind of broadening formation here that we did bounce off of so far. Now on the monthly side of things, you'll see here that this is promising for the bulls. We did break out of this monthly long-term resistance zone. I mean, this is a big deal. Now, it is also interesting to note that this is the 5th month in a row that we've closed up green, and a very similar move happened back in 2003 when we had this type of move. And it's actually fascinating. You can see you have the 5 green candles here from the bottom. This is our bottom 5 green candles, 5 green candles. You have this red month. You have a red month. And then you have another 5 green candles. Here's your 5 green candles again. And after that, for about 6 months, we did nothing. So doesn't mean that has to happen again. We are breaking out of this longer term resistance. So take it for what it's worth. But I thought that was an interesting correlation between, just overall the market's really moving up quickly over the last few months with IWM leading. And you saw something very similar back in 2003. So is this just the start of a bigger bull market after a couple months of consolidation? We'll have to see. But that is something to note if you are on the bull side of things. Now, DIA is one that did not have the best close by any means. I mean, I looked at this chart and I was like, am I missing something? I mean, this thing absolutely tanked into close like the last few minutes. We do have the volume below, but we also have a volume gap below. So remember, the price gap is here around 303, 304. But then we also have this volume gap, which is this area where there's just not a lot of liquidity below. We don't really get to a lot of people that bought until we get to around 300. So these shares will start to break even, but for now, they still are holding a profit, which allows them to add to the supply as they take profits before they get back to break even. That's the daily side of things. The monthly side of things, we are at this longer term area of resistance, kind of a wick here on the monthly chart as well. And going into March, only a 17% win rate since 2015. So that's something to consider as well. You know, 6 years isn't the biggest sample size, so we can always change this, let's say since 2010, and it does change to 55%. However, you know, 2015 was when we really had the oil crisis and the markets kind of really had a stalling point before really just ripping since then, pretty much. So that's why I'm doing it since 2015 here. So not the best seasonality. We are at long-term resistance. So you're able to pair your technical analysis here with that seasonal win rate, which isn't great. So just keep that in mind going into the weeks ahead and just the month of March in general. The weekly chart, we've got this broadening formation as well. You can see here that we are nowhere near the support below, and we'll just have to see if we have another red week or we reverse here. But there is a pretty strong uptick in volume here with this sell-off. So we'll have to see what happens going into just next week. But really, the fact that we're starting a new month is really important. VIX. VIX yeah, popped a little bit, but nothing out of the ordinary over the last few months. We've had bigger moves. We had a bigger spike actually at the end of January, which is kind of shocking because this was more of a big move down on individual names rather than the indices. Obviously, the Qs really took a beating, but SPY hasn't really taken that big of a beating yet. On the monthly side of things, if you guys remember when we did a video earlier this month, when we first started the month of February, we were talking about VIX having only a 45% win rate for February. Sorry, 42%. And you can see here that I think it's already updated. So now it's 42% win rate for February. So you can see here that this was in line with seasonality on the monthly side of things. So this is just a great way to use seasonality to get an idea of, you know, is there any type of edge in the market using the technicals and seasonality. But remember, you can't really do technicals on VIX, but you can just look at these levels and you can just look at the overall, you know, sentiment. Is it red? Is it green for the month? So hopefully this was helpful. We have Ben coming up next in the next segment, and let's move on there. Alrighty, welcome to the watch list segment with Ben, aka Pattern Profits. Ben, thank you for coming on and talking some stocks today.
Thanks, Jake. Always a pleasure to join you.
So today we're going to go over a few different stocks that you're watching and just overall charts that, you know, I know you have a specific setup that you look for. So I'm assuming we'll probably see that setup a couple times. Do you want to talk a little bit about the setup that you're usually looking for and then some of the stocks that we'll be checking out today?
Yeah, sure. The main setup is the power earnings gap. That's one of my go-to actionable ideas. And I love to see, you know, this type of gap like we saw back here with big volume. When we get those moves, that kind of clues me in that, hey, something's up here. The institutions, there's demand here. And a lot of times we get that signal with a big move and a gap following earnings with big volume. So what I like to do is attach that anchored VWAP at the day of the gap. And then what we tend to see is a little dip or a little dance around it. Then it finally reclaims it. Then we may get some sideways action. And, you know, depending on how the overall market is too, this time we got a little triangle. Once that triangle broke out and we reclaimed anchored VWAP here, it held it all the way through until the next power earnings gap. So we got another power earnings gap this last report. And now instead of forming a symmetrical triangle, we have more of like a broadening formation here, but it's playing out very similarly, you know, big volume. Then we get the little pullback, then the reclaim, and then off we go. So I'm looking for this one, you know, to make a run back towards that upper trend line, ascending trend line of that broadening wedge. Volume shelf, you have very nice support just below.
Love it.
Yeah, kind of one of my textbook plays there.
Very nice.
And, you know, it's fantastic to be able to keep all these power earnings ideas in one watch list. So when they have that gap, I can just go to that watch list and, you know, really easily see what the action is and what's going on, and it keeps me tuned into them. Here's another one. This is Dynatrace DT. Same thing, big, power earnings gap here, pulled back. Then, the market's been a little tough the last few days, so it dipped below, but now we're right back to anchored VWAP, volume shelf just above. So I look for that trend line to get broken, push right through, and then off we go. That's the textbook way that I like to play these on the earnings gap.
What a flush that had.
Yeah,
Wow.
welcome to my world. That was my whole world this week. A flush the last couple of days. I got a bunch of those.
Oh man. Twitter.
I have a history with this one, and it never treats me well. But for once, we've had a weak market, and it's hanging out, above anchored VWAP from the gap. Again, you had a big power earnings gap. This time, it's holding. It's holding anchored VWAP. It's right near where the highs, where a lot of other stocks are way down here right now by the 50-day moving average. It's way up here near the high. So what I'm thinking is, as the pressure comes off, the major averages, we might get a breakout here. And for once, Twitter is going to hold its earnings gap and maybe push into new highs.
Yeah, looking
So
strong.
that's another one. Like I said, keeping all of these on the watch list makes it so easy. This is another one that I'm watching. We got our pinch here.
Nice.
Volume weighted average price off of the high, as well as off of the low. When the market did come in, pulled in, tagged that area with the volume shelf, it was, really a textbook tag there off of the bottom. Now looking for that first run and tag the anchored VWAP off the high. And then if we can, push through that level, maybe we get a run back up towards here, towards those prior highs. So that's what I'd be looking for there. You had this big breakout, and then the market rolled over, so it came in. So it's kind of like another opportunity, if you miss this breakout. And that was another big volume move.
Now, are these stocks that also have a fundamental story as well, or are these just the same setup technically?
So all of these come from the power earnings gap list was the first few I showed you. This one comes from what I call my focus list, and that's where I've already researched the revenues, the earnings per share. I know that it's in a strong group. I kind of already did all that research. I can put them all in one, folder there in Watchlist and run through them. Just like earlier this week when the major averages were all testing their 50-day, it was really easy for me to go through that watch list and say, okay, what's still above the 50-day moving average, or what's still near highs? Those kind of jump off the screen when everything else is well below. So it just makes everything easier for me.
Makes sense.
I got one more I wanted to share with you. A lot of my followers on Twitter will know this one, Celsius Holdings. And what this one's doing, we got a triangle here. And then look at how the wicks of this, it set up this triangle. You had the gap back here with big volume. And here's your anchored VWAP off of the gap. It tried to go, and then the market didn't cooperate, so it rolled back over. Then it tried to fail, but buyers stepped right back in. It held the volume shelf and point of control there. Now it's right back in there, in the triangle at the ascending trend line. And today it reclaimed anchored VWAP. So I'm definitely long this one. If the market gets healthy, I'm hoping at least a run back up here, and then maybe a breakout. And then the bigger breakout would be if we can clear that, prior high.
Makes sense.
Yeah, these very, very easy for me to keep track. This is what gets my attention. The gap on the big volume. That's what puts it on my radar, and then keeping it in the watch list so that it's front and center, every day, and I can check on them.
Is there a particular market cap size that you stay within, or is it just kind of dependent on what the company is?
Not as much market cap as float. I like to look for the lower float under 100 million, because I know that those, when there's demand and there's low supply, those are going to be the ones that really take off. So for me, it's more, what's the float? And if we're turning over that float, let's say it has 25 million is the float, and it's doing 20 to 25 million in volume a week, that's something that's going to really get my attention, because I know the demand is there and it's turning over its float in a week. That's something that, I want to pay attention to.
Makes sense. And we're almost at the end of the month. Obviously, we do this recording a little earlier in the week. So by the time that everyone watches this, the monthly candles will be closed. I'm just curious, what does the monthly candle look like on CELH and some of these other ones that, possibly could change a little bit into the next couple days, but probably will stay somewhat as they are now?
On Celsius, and as anytime we have a triangle, you're inside. So whether that's on the monthly or the weekly, that you're in. Anytime you see a triangle, we're inside. So there's, basically on Celsius, we're inside on the month. So obviously, if we come out of that triangle, you're looking to take out those highs. Ultimately, that's your goal, is to get the market healthier again and then taking out those prior highs. And the same thing if you look at like Twitter. That's one of the great things about using the power earnings gap. You're right up there near highs in the bigger picture. Whether you're looking at the weekly or the monthly, if it had a big gap on earnings, you're dancing right there near all-time highs. You just need the market to cooperate a little bit, to take out those highs and give you that next, big green candle up.
Absolutely. Twitter's been an absolute monster already this year, especially after that big flush after all the political stuff. So it was interesting to see how quickly that came back into just the green monster mode. That thing just won't look back.
Same thing.
Is also breaking highs too.
Yep, that's not a trace. That was another one that had the power earnings gap, and then when you go back and look at the monthly, you've got that big green candle. So you're just waiting to print that next, big green candle as it takes out the highs. Huya, the other one I shared, that one's a little different. I got a bunch of old view apps on there. This one, we are right, here's prior highs. So we're kind of, let me see if I can clear that up a little bit.
Oh, wow.
So here's your prior highs right back here. So you've got there we go. So you've got to get, up there around the $50 level to those prior highs. But when you look at this kind of double bottom pattern and this shakeout here, where you shake out the weak hands, you not only shook out the weak hands here, but you also shook out the IPO low, which I always like to see. When you can take out that IPO low and then reclaim it, you got those weak hands out. Now then you came up, you had a nice run, kind of flagged a little bit, and now coming out of that flag. So you look again for that monthly candle, that next monthly candle, hopefully gets you back up here to those prior IPO highs.
Big C had a very similar move a couple weeks back, and it even had the same move this week after that huge flush. But same thing, kind of that undercut of the IPO lows, and it didn't close great today on Wednesday, but it's still. Look at that wick. That's
crazy.
That thing 53. I just blows my mind some of the moves that happened on Tuesday. One more before we go. I know this is an overcrowded trade, and or maybe it's not anymore after the flush on Tuesday. Fubo. I know Fubo is probably one of the more, I don't want to say it's a meme stock, but it's something that about everybody talk about. I think maybe it's just the acronym is so easy to say and everyone says, oh, Fubo, it's just easy to say, I'm going to buy it. But This has been one, I think on the monthly side of things, there is an inside month kind of forming there too. And actually maybe not now, or yeah,
Yeah.
I think there still is. So it's going to be interesting to see which way that one resolves finally.
Yeah, I own this one too. Volume shelf is right there. Um, I describe this one as if Roku and DraftKings had a baby.
Yeah.
They'd have Fubo. We'd have, that's what we'd have. And I love the fact that this one, we've had a rough market the last few days, but anchored VWAP from the high, anchored VWAP from the low, it's holding. I was scared here, no doubt. I was thinking, oh, here we go. This thing's going to completely roll over. But again, it's held and it's firm the last couple days. How often do we see anchored VWAP, mark the low and then make the turn? So
Yep.
yeah, that's what we'd be looking for here.
Well, it'll be interesting to see how this one closes on the month. You do have, a lot of people that watch this, and that's, a lot of people don't understand what an overcrowded trade is. Well, if a trade is overcrowded, all of the demand is gone because everybody's already in who's going to buy it. That's what creates the overcrowdedness. There's no more demand. So you need flushes like this, and it's pretty healthy to have a flush with a higher low like we saw there. As scary as it is, Fubo is notorious for these types of moves. I mean, what do we drop from 62 to 23 within a week in January? So
yeah, it's not its first time.
right on par with what Fubo does.
Yep, that's exactly what that's the character of this stock. Is it's gonna, terrify everybody that, you're in ecstasy here as you're running up, and then it's puking on the way down and you're just in extreme pain, and then it runs right back up. So yeah, the character of this stock. The one good thing I would say is, even though it's come down, the volume has quieted significantly on this pullback compared to what we were seeing back here.
Yep.
So maybe that is a good sign that we really shook out the weak hands back here with this big volume. And now you're in stronger hands, because if you look at that volume pattern, even though price is coming down, it doesn't say aggressive selling, to me, when you view the volume easing up like that.
Yep. No, I agree. And full disclosure, I have a position as well. Just I know this is something a lot of people watch and a lot of people will probably want to hear about. So figured we'd talk about it. But Ben, it's always a pleasure to have you on, talk about your power earnings gap watch list, your overall style of trading. Love having you on and looking forward to having you on again.
Thanks, Jake. I appreciate it. It's always a pleasure.
Hey, you're very welcome. All right, everyone, let's move on to the next segment and let's get started. All righty, let's look at some chart requests, starting with Baidu. If that's how you say that, I'm not sure how you say it, but BIDU sounds like Baidu, so that's what we're going to call it. BIDU is one that has really become a pretty hot topic over the last few weeks. I've seen this name mentioned quite a bit, so figured we'd throw it on the list. And really, it's done what every other stock's done in the last week. It's gone down. Now, the one thing about this is very similar to what we talked about on IWM. We do have these gaps below still. 1, 2, 3 gaps shown by the gap snake here. And we do have this pennant though as well. So, this is definitely something that's kind of coiling here, but the market is just in a weird state where sometimes the charts are really kind of throwing us for a loop. And that's why, the alert system is really crucial, because you just set your levels and you let the alerts tell you what's going on. You don't have to predict. You just let the price action do its thing and you take it from there. So in this case, we do have this pennant here. The main thing that I wanted to point out here is that we pretty much closed right at this previous high from May of 2018. This is where I just go in, create an alert at this line. Pretty much just whenever the price breaks through this line, I'll be alerted. So if that's something I really wanted to look for a continuation, I'll just type breakout here, put it for 30 days, since this is a monthly candle we're looking at, and we'll see if it actually breaks through and closes above. The volume has definitely been noticeable here. That's something to also consider. But with the price action being weird across the market, this is just a great example of just setting your alert above. If the price breaks through, it's time to look at the chart again. On the next chart, we have U. This is Unity. This is one that a lot of people have been trading or trying to trade. You know, everyone's trying to catch a bottom here. I think we went over this chart literally 2 weeks ago, and we were talking about this hammer here, and we've done nothing except drop since then. So this is just a great example that these candlestick formations sometimes are not going to work when you've got a weird market like this. I mean, every single pop has been sold, and you can see this falling wedge is trying to form here. And so same thing. Let's not try to guess what's going to happen here. Just set an alert on each side of the falling wedge. Whenever the price breaks through the upside, create an alert. Falling wedge resistance. Choose, I don't know, 20 days. Create the alert. Create another alert here. Don't go to properties. Go to actually create alert. Breakthrough. Whenever the price breaks through this area, you'll be alerted on the 10-minute chart. So that means when the 10-minute candle closes through this line, that's when you'll be alerted. Name this falling wedge support. Have it expire in 20 days. And now we don't have to guess which way the price is going to go. Just let the price either break to the upside or the downside, and then we take it from there. Now, I did want to point out here on the monthly side, this is an absolutely horrid monthly candle here. If we go to the weekly chart, it's actually pretty fascinating that we've had 5 red weeks in a row. I mean, we've dropped from 167 all the way down to $97 in 5 weeks here. Just an absolute waterfall of price action. So, you know, 5 weeks red in a row is a lot. And this is something I would definitely be looking at as possibly some type of reversal, just because you're going to have selling exhaustion here. I mean, 5 red weeks in a row does not happen often, just like 5 green weeks in a row doesn't always happen too often. Going into Chewy, haven't looked at this one in a while. This is a pretty interesting case study for a couple of reasons. So one, you can see here that we do have the anchored volume by price from this November 10th capitulation here. And you'll see what I've done is I've added the anchored VWAP, the Alpha Trends anchored VWAP with an offset. So you can see here if I take away this percent offset, you'll see here that the price action isn't respecting this line more than once. Now, if we go and we add a 5% offset here, you'll see that now the price action is really respecting this 5% anchored VWAP to the upside multiple times here, even on February 23rd when we capitulated here, or I didn't capitulate. We wicked down. Who knows? Maybe it was capitulation, but we wicked down all the way down here and tested this area perfectly. You can see that the price has tested this zone multiple times and then rode along it literally since November. So the anchored VWAP percentage offset is just something that is really it's just something that really gives you a little cushion around those areas, because it's not always going to be perfect, as you can see here. Now, on the weekly side of things, you can see that we were looking at this 3.618 extension. It literally bounced right off of it. Now, if we go to the monthly, this is when it gets interesting with the fibs. You'll see here that I've measured the move from this IPO all the way down to this wick here. And you'll see that we literally almost tested this 4.618 extension perfectly. Whenever we have an IPO base with a breakout, I'm usually looking at these areas and I'm not asking, you know, is that a 0.618 extension? I'm asking which one is it? In this case, it was the 4.618, literally perfect over the last 2 weeks. We overshot it a little bit, maybe by $1 or $2, which is maybe 1 or 2%. So definitely just a great case study on using the fibs. Same thing. If you want to create an alert on these fibs, you just go, you can add sensitivity to it. You can do whatever you want. This allows you to really stick to what you're watching and not allow emotions to get into the way. So that's Chewy. Tesla is the next one. Tesla has really had some trouble over the last couple weeks, pretty much for the whole month of February. It's just been brutal. Anchored the volume by price from this capitulation here in late October. You'll see here that we did bounce off this volume shelf, but you'll also see that we have this huge volume gap here. So not a lot of holders below until we got down to the 630s. So the price was able to drop, pretty much just slice through this zone, because there just was no liquidity until we got down to this 630 zone, which was when everybody went back to break even and supply dried up. On the monthly side of things, brutal candle here. I would not call that any type of healthy candle, but not a lot of volume either. So keep that in mind. And we have had candles that look like this that just continue up. So keep that in mind as well. Now, on the seasonality side of things, you can see here over the last 5 years since 2015, only a 33% win rate into March. If we look back since 2010 or since the IPO in 2010 June, it doesn't change a ton, 50%, so a little higher, but all in all, not a ton that we're seeing on the seasonality side. We're not seeing a big change in win rates here from February to March, about 5%. Now, if we do go to since 2015, those do change a little bit. 43% win rate for February is kind of right in line with what we're seeing on the chart, very red. So definitely check out seasonality. It's something that is another variable in the equation. It's not gonna be something you use on its own. You use it with the technicals just to see if you can find any complements. Now, going into the last one, Fiverr, FVRR, kind of similar to Chewy here with the fibs. You can see here that we've got this IPO base. We did the measured move from the top to the bottom. And then you can see we literally hit this 11.618 extension almost perfectly. It's kind of fascinating how well the 0.618 extensions work, especially when you don't have anything to compare it to. We didn't have any price action to, highlight pivot points before. This is blue sky above. So the only thing we could really use here was the 0.618 extensions. Now, this one obviously hasn't been around for very long, so we can't really do any type of seasonality here. But on the daily side of things, you can see if we do anchor the volume by price from this low in November, most of the volume is really down in the 200s, the low 200s. So there's not a lot of volume supporting price up here, at least concentrated volume at specific price levels. You can see it's kind of allocated across this entire range. So that's something to consider. We do have the anchored VWAP below around 230. If this broke down, this 202, 200 to let's say 210 area would be the area possibly where price pops a little bit. Now, if we move to the upside, just anchor a VWAP from the swing high, and this area around 293 would be the area that we'd need to break through. And you can see that we're kind of creating a very early stage pinch here on Fiverr. So hopefully this segment was helpful in just understanding how you can use these different TrendSpider features to just go over different charts that you're looking at over the weekend, into the week ahead, into the month ahead. And remember, we do have the free trial. So you can try all these different features out for free: the raindrops, the seasonality, the alerts, the anchored volume by price, anchored VWAP. All of these things are free to try, so you can see if there's something that actually will help you within your trading journey and your technical analysis. So if you have any questions at all, hello@trendspider.com is the place you can reach us. Our Twitter DMs are also open, so keep that in mind. But all in all, hopefully everyone had a good month of February. I know mine was a little crazy as far as the trading side goes, and we'll have to see if March brings us any different conditions. But for the time being, hopefully you all have a great night and a great week ahead. Thanks for watching, and have a great night.